Okay, we're gonna briefly go through some of the different. I sent y'all an email out about different brokers, Robinhood, Schwab, E-Trade, Fidelity, blah blah blah. I started trading with E-Trade. So I use this video to kind of explain uh, what we would call the generic home summary snapshot screen. You probably won't get any of this, or at least not a clear picture of this in Robinhood and Fidelity. You may have to click on 3 or 4 different tabs to get this. But E-Trade gives you a quick snapshot of what almost any brokerage company information would give to you, like Yahoo.com or whatever, give you about the same information. So if you're looking at my screen, I'm just going to go through some stuff that you would get. Like I said, this is E-Trade, but you can get the same thing out of Fidelity and some of it out of Robinhood. But E-Trade puts every broker put what they want. They think most people want to see on this. It's called this one is called the snapshot screen. Fidelity is called the summary screen, I think. Anyway, we're gonna go through what this is some of the stuff that you want to kind of understand when you're looking at a chart or a stock or a fund. So first we're gonna pull up a stock. I just picked Lucid. This is a this is not how it looked when you go in. All the yellow, blue lines and stuff. I marked it up so I can go through some of the points to tell you what you kind of want to understand about any stock, any fund chart. So first of all, pull up E-Trade, you'll see up here the symbol. So the symbol is LCID, Company Lucid Group Incorporated. Okay. Some of the things that you might miss is this top line on here will tell you, and I just found this out, and I'm gonna show you a chart on another ETF to show you how. Oh yeah, these screens change depending on what you pick. ETF may not look the same as or a fund, an ETF or a 401k fund or something like that may not have the same information as a stock will. Um, I'll show you what I mean. So anyway, first thing you see is that this stock is traded on the Nasdaq. So you see Nasdaq stock exchange. Then it tells you about the sector that it's in, and this one is called consumer cycle. Then it'll break it down a little bit further if it can to go even deeper. So this one is automotive company, auto parts, right? And so it goes down, then it tells you what the stock is currently trading at. But with that, you have to check because this is after the market. Of course, today is a Sunday. So, but this is what it closed at or where it's at currently. If it's actually during the middle of the day, then and as you can see, this says at close, 4 o'clock p.m. January the 3rd. Of course, today is the 5th, but this would have been Friday. Yeah. And then, but if you got on here, you can turn on extended hours. Most of the times, you can't change a whole lot on these screens. You can't really customize them to show other stuff, but you can turn some stuff on and off. And on here, you see it's got you can turn on extended hours, so that will show that box. If you turn it off, that box won't show, and it may show something else. Um, one of them even what it was. Fidelity even had whether or not it was real time or 15 minutes delayed. Even if you're doing a quick trade. So anyway, and this extended hours says after hours is up a little bit, up 0.15%. So instead of 32, 3,029 cents is 3,020.295. So that means if you go in there and you see it's at $3.50, you'll say, wow, what's going on? Or if it's down a lot, you say, wow, it's bad news. So that number could be big, really red or really green. Um, so that's the extended hours. So I highlight some of the stuff that I look at anyway. So the first thing is this right here. So see that blue line right here on E-Trade? You'll have a blue line or some kind of thing in any broker you know to know which one which selection you pick. I could have picked charts, news, options, analyst, blah, blah, blah. Just let you know you're looking at Snapshot. Like I said, in Fidelity, it's called summary. All right. So you go through and it tells you um, all this stuff right here. All this stuff right here is given to you. The same thing on yahoo.com. It may have different things. It may not have certain things. Same thing on Fidelity or some of the same things. But like I said, I know like the dividend stuff is on another um, tab on Fidelity. And so, but these are some of the things you want to kind of understand what they mean and why it can be important. So, first thing I wanted to show you was let's go from top to bottom. What I highlighted. So you see it's got bid times size, X times size. So sometimes you would hear this referred to as bid to ask. That's called the difference between the bid price and the X price is called the spread. That's important because in here that price is only 2 cents, 328 to 330. That number could be 20 cents, could be $1. And so the reason you want to watch the bid size and the X size is because if you went in and say, I want to buy this stock, they're going to sell it to you at the higher price. So you would normally go in and say, okay, I know I can buy the stock at $3.30. I put my order in right now. It's got heavy volume. I can get in at 330. But if I say I want to get in at 329 or 328, they may or may not sell the stock. But that's really bad if that spread is say $1, $3 to $4. You say you want to buy the stock, they're going to give it to you at the $4 price. So you want to put in what they call a limit order and say, nope, if I can't get at this price, I don't want it. And so when you see a real close spread and on $3 stock, 2 cents is pretty close. Sometimes it's a penny. Then you can probably get in the middle, 329, 3.29. If you and I'm gonna show you the other stock where I don't know if the spread is big, but I'm gonna show you what determines the spread. So you always want to know that if you bought a stock and turn right around and sell it, you automatically within the next 5 seconds you would most likely lose money because they would sell it to you at the higher price and they would buy it back at the lower price. That's just what they call the spread. So that makes a big difference. And as we go down, like I said, we selected this tab. So on here you'll see, you see the what it open at and what it close at. But one of the things you want to notice is the volume. So this is the volume for that day. 107 million shares were traded. Whether that's whether that's a buy and a sell or just a buy or a sell, that's not that important. But you want to know that this is the volume. That makes a big difference in the sense that it shows you what the average volume is for 10 days. So on this one, the volume is high because of something that I'm going to show you up here called the float. So you'll see it called the shares outstanding. That's the float. The float is how many shares out there that people can buy and sell. So on this stock, which is Lucid, they got 3 billion shares. So because they have 3 billion shares, you'd have to say out of 3 billion shares, is 100 million a lot or is it low? Is that common? Well, it's common because the 10-day average is 115 million. If you've seen the average volume at 1 million and then you've seen 50 million, then you would say something must be going on. That's a lot of volume. And I'll show you that on the next stop. I think I picked one of the dividends that's what I had. All right, so the shares outstanding is sometimes you might hear people talk about the float. Why this is important is the higher this number is, so this could be like 10 million, or might can be even less than 10 million. If that number is low, then the stock itself can move dramatically. If I go in and bought 10,000 shares, if I bought 10,000 shares of a 3 billion float, it don't even move the stock. It's not even noticed. So the float is kind of like saying, I want this number to be big if I don't really want the stock to move that far. Meaning, this stock is not going up $1 in one day because it's got 3 billion shares out. If that number was low, that stock could go up 50% or down 50% in one day by one person going in and putting a huge order. And and I'm gonna show you again. Oh, let me go back to this right here. You see where it say bid times size? I think most companies would give you the bid, like Robinhood and Delta would tell you the bid times the size. The size is this number right here, which I didn't highlight. But like the bid is here, where the size is important because you might see that number that say 100 and 100. So when that number say 100 and 100, it's really like don't even pay attention to it. That's the last order that was placed but not filled. Somebody wanted to buy at this price, somebody wanted to sell at that price. So if you definitely, I think people that quick trade or day trade, they look at that number a lot to see if a big order came through. So this is, and I'm gonna say 10,000 may not be a big number for a stock that's got 10 billion, what we call float. But if you was after hours and you seen 100 and 100, because I think they only go low as 100, then that's almost meaningless. In other words, somebody could go in and say, I want to buy 100 at $4, and that number may go to $4, but you'll see only uh, the size is only 100. So that can be manipulated after hours. Somebody can put in an order just to make it like I can go in and say buy uh, before while the market is closed, buy something at 100, and that number would change at $4, and that number would immediately change to $4, and it would make you think something's going on, but it's really just a fake order. So you kind of have to watch the size, and I'll show you it on the. I'm gonna show you a comparison chart of an ETF. All right, so we're down here at shares outstanding. So that's what that float means, and we're gonna jump to market cap. I didn't highlight market cap, but market cap is basically just the multiplication of that number times the price. So if you multiply 3 times that, that'll give you the market price. So that's changing every time the stock goes up and down. But yeah, I didn't highlight that, but a lot of times if you see that at 10 million, then you can say, well, that ain't no big company. So we don't know how big, well, might know how big Lucid is, but that tells you a little bit about how big the market caps tell you about a little bit about how much money they were, how much uh, infrastructure or people got hired. All right, so we go back to volume. Like I said, the volume kind of lets you know more in relationship to the average volume if the stock got a lot of news or not a whole lot of news. But on this one, you can go and click on, I'm not showing this historical quote, and it will show you like the last year or last month, whatever you select, what the volume was and the price was every day, and you can see if that number has been consistent. They already telling you it's 10 days, but you can go back a month and say, okay, was it ever like 200 million or 2 billion in one day? So that's kind of good if you're day trading. All right, I'm not really into personally beta, PE, or EPS, but I mean price to earnings per share. That that's something you might want to research because I know people trade or put it like this, disallow or include stock based on the PE and the EPS. I don't use it's called earning per shares. This is the price to earning ratio. So you can go in and research that on your own if you want to. Like I said, market cap is right here. All right, we're gonna go to dividend amount, and that slash means yield. So this one don't show it, but the next chart will. This basically means the stock do not pay a dividend, but you would see like a price over here slash and a yield. And I'll explain the dividend amount and yield on the next chart because a little bit about how that number changes every minute or every day at least. But you do want to learn about the ex-dividend date and the dividend pay date. Those 2 dates are really important on sometimes when you decide to buy a stock. Meaning, if you buy the stock at a certain date, it may take you almost 3 months just to get the dividend. Versus if you buy it 2 days before, then stock probably would be higher because everybody buying the dividend. We'll go back over, but like I said, this stock do not have dividends. Um, but you would have numbers here, and I'll show that on this chart, just like this, but just different. All right, and then the other thing is the 52-week range. Pay attention to this because it shows you the high and the low. So look at the high and the low, but it also tell you when it was at the high and when it was at the low. So this is not a big gap, 8 to 11, versus if it was here and constantly, stock was constantly going down, then that would be like, well, this stock is taking. Or if the stock was constantly going up, you say, wow, that's great, but do I really want to get in at the high? And somebody told me that, well, a stock can never make a new high unless it, you know, goes above the high point. So you want to buy it at the high. That's, that's perception. I can't tell you to buy it at the high or the low, but you want to know which way the stock is going, which way it's trending, and what's the possibility of it keep going down or keep going up. But that's why you look at like 11, 15, you're closer to the low than we are to the high. You can look at the chart and tell that, but that don't always mean that you want to buy it because it's at the low, or you want to buy it because it's that high. I mean, I'm sorry, we're closer to the high than we are to the low. So even though it was at the low in November, now it's at $3. It went back up, and you can look at the chart and see that right there. But that's kind of what you want to know what the range. If you're looking at the next thing I want to show you about, well, of course, the earnings date. That just tell you when the next earnings coming out. One thing you do want to know about this is earnings comes out quarterly, just about like most dividends do. So if this number was like 11, sometimes the next earning date might be in the past because they haven't updated your chart yet. In 3 more months, earnings will come out again in like the fifth month, which is April or May. That's kind of good to know because around 219, this stock could do some weird stuff. Okay, yeah, like on around two, whatever, February 10th, whatever. A lot of people don't speculate is the stock gonna go up or down. So you have to ask yourself, can you stand the stock dropping 10% in one day? I know you can stand if it go up to 10% in one day. You have to sometimes notice the earnings date because that's when a stock may be volatile. All right. So one thing that I did not circle, thought I did. Um, thought I did. But anyway, so over here we go over to the chart. One thing I want you, first thing you know is right here. You could select one day in E-Trade, one day, 5 day, 1 month. Some of them have 3 months, 6 months, year to date, just only a couple of days now, and 1 year, 5 year, all time. So what you need to notice, if you select 5 year, or if you say 1 year, that don't mean this chart is 1 year, right? Because you'd have to look at what the days are down here. So if you had selected 5 years and this all you saw, you don't see a 2024, 2023, 20, and you'll see this on the next chart. That's why I'm running this. And so you would say, okay, this chart is 5 years. It may not always be. It may be a 3 year chart, but you don't stop because the stock only been around for 3 years. So you have to kind of watch that because here you can see this is March. Well, I mean, this is April. So you could almost assume this is January. This is a true 1 year chart. And I'll explain that when we look at the next chart. Same markup, but you'll see that this March it don't start with January. So you would assume January right here. Y'all can see it. All right. So back to the chart. I put this on here, and this is what I call markups. This is not a great example, but I was talking to somebody that said that you want to kind of understand the points of support and resistance. So if you were to draw a line, that line would kind of be red long in here, right? That would be because you can see the bottom. Over here, that line would probably hit right here. This would be another support or resistance line. So what I say about every point on here, even though it might be on the bottom, might be on the top, every point is a point of support or resistance. So this point right here is about where the stock is at now. So well, let me go here in the middle where you can see. So right here is a point of support, right? That means stock was going down, and when it got there, it had support. So right here, this would be a point of support. Over here, where you see the stocks going up, you could draw a line across here because it's going up now, meaning the stock's down here somewhere. This become a point of resistance, meaning they can't hardly get over that hump. Same thing here. On here, when it goes up to this point here, because the stock is going up, this become a point of resistance. It's resisting going up any higher. And so if it breaks over that and goes above that line to somewhere along in here, you're going to assume or you're going to plan for this stock to go to the next line, which will be here. So this would be a point of resistance, and then that will become a point of resistance. So in here, these points right here, as you can almost see right here, from there to there, there to there, that become a range that you would trade at. When it gets here, if it can't make it, it's going to come back up to here. It went over, but it came right back down. So you get here, when it comes back down here, it's going to go back up. So, so the theory is that if it drops below this, it's going to probably drop all the way back down to the next point. So you would be looking back to say, if it can't hold right here, I got to be able to stomach to stop dropping all the way back to here. And it's kind of hard because this is not an interactive chart. Kind of hard to tell you what this point is, but you can assume it's 225. You can assume this is closer to 250, so you're going to move forward. So when you come up here to where the stock is today, you would draw lines of the last 2 or 3 peaks and valleys. So this stock right now is at a point of resistance. It got to break over that point right there, which is about 330. If it breaks over that point, it's a chance it will go to this one and it'll have that same problem again. You could probably draw a line. So I drew a line right here. You can see that it came, even though if you look at a 1 month chart, you wouldn't see none of this. You just see this part right here. So that's why you have to look at a 1 year chart sometimes. And you have to draw that line all the way across. Those are the last 2 bounces, right? It bounced from there to there to there. You have to draw that line all the way across and see if it hits a lot of other points. So that line right there, which going down would be support. It corresponds to that one, that peak, that peak, that peak, that peak. And as it goes up, it corresponds to that peak. That one didn't quite make it, but that peak, that peak. So the next line would be somewhere along in here. And if you own the stock, you would hope that it just shoot past that. Then you don't have to fight this line right here. It's only like 360 maybe. Don't look like it's 370, but it could be 370. You can actually go on the chart and see what these peaks are. But it's a good chance this stock, if it don't go up, it's gonna come back down to $3. If it don't jump past this and get to that one, it's gonna drop back to $3. I mean, that's your analogy of the stock. The stock can do anything because, like I said, in the state they have earnings. So on that date, it may shoot up or drop all the way back down to here. But you're looking at the chart to see, a normal thing with no news. So we know we're gonna get news around this date, but with no news, it's gonna fight between these right here, and it's gonna either drop and then come and fight here, or it's gonna go up and come and fight here. This, if I didn't have all this in the way, you could see clearer points versus the little. That's not real much, but you can see the clear point. So this point will now become a point of support, whereas when it was going up, this was a point of resistance over here. I'm talking about over here this week, next month. So you got to see if this stock gonna stay in between these 2 lines. So every point that you draw on any chart, you can span this out. It'll be a lot easier to draw the points on the 1 month than 1 year. You should have less of these. That's how you determine the volatility. And most cases, this is where people bought and sold. This is where people bought and sold. This is where people bought and sold. This is a pretty quick one. So you might come down a little when you got a real short. Like, see, this is like a fight right there. This is more like a quick bounce. You might have to come down a little bit and see if it, like right there, a quick bounce. You might have to say, okay, this one's, it may shoot up, but the point is really or lower than that in between that. So when you see that's a good fight there. Stay there for a while versus that little sharp, it can bounce real quick. But that's basically the stuff you have to look at a chart on. All right, quickly we're going to go over and we are going to try to drag over this one here. Same company. So can y'all see that? That should be Round Hill Innovation. Same chart, basically all the same information, but this is what they call a ETF. This is one of the stocks that I bought in my Roth IRA. Um, and it shows you a little bit different things than the other one shows you. So I'm not gonna go through all of them just like I did on the other. I kind of explained what the volume and the average volume and some of the other stuff, but I'm gonna show you some of the comparison. First thing I just noticed was this. This is on some exchange called BATS. I have not researched it, but I will after this. It's not the New York, it's not the Dow, and it's not the NASDAQ. So whatever the BATS is, I'm assuming it's got something to do with options. But it tells you that this is a fund family round here investment, which for anybody else don't know what that means. But we know it's an ETF, which means it's not just one stock, it's more than um well, you can Google what ETF means but basically it's a couple stocks. But this one is ETF is focused on one stock, but it's exchange traded, so blah blah blah. Anyway, but so that may be helpful. Same thing, if the stock is up or down, it'll tell you if it's doing anything after hours. It closed, that does same thing. It's the weekend, so that's good. And it'll tell you it's up 3 cents. So you own it, that's that's good. Same thing about the bid and the S. I forgot to put the other box, but did let you know this. So you see where I was saying how this one say the bid is 40.23, $40.23. And somebody put an order in to, I think that is to buy 100 shares. Uh, but the real point is not whether it's to buy or sell, because this number would have been 200 make different. But the real thing is only 100 shares. And you see the gap, 40.23 to 41.04. I was telling you about the difference between the bid and the ask is the spread. So if you just want to say, I want to buy that stock, they're going to sell it to you at $41. If you come to the bank and say, oh, I didn't mean to buy it, I'm going to dump it, they're going to sell it, they're going to buy it right back for $40.20. So you have to kind of watch the difference between the bid and the ask, what we call the spread. And you really want to be leery of a stock. If you were a day traders or if you were trading a gap that big, you would never, if you went in and say buy it at $40.25, they'll just move it up to 40.25. Say go and buy it at 40.30, they'll move it up to 40.30. They're not gonna give you that with a gap like that. They're gonna close that gap. So I'm gonna show you why the gap is so small. Gap is so small. Remember I was telling you about here they got shares outstanding. It was on the other chart. It was at the top. And that's why I was telling you about how the ETF don't have all the same information as the other one, but it's at the top. And I'll show you some stuff again about the lines too. I didn't put on this attention. But you see where it says shares outstanding? It's only 16 million. That's why that gap is so wide. Because remember the shares outstanding, what we call the float, is how many. The other one had Lucid had 3 billion. This is only trading 16 million. So if I went in there and bought, if I could afford to buy 10,000 shares, that stock would plump. If I was buying, that stock would probably shoot up just because somebody bought 10,000 shares. I'm gonna show you, and that's because remember the other one had I think it was 100 million shares per day. I think it was 100. Yeah. Well, whatever that number was on the other one. Okay. billion. But anyway, it had 6 zeros. So this one got 3 zeros. So, you know, it's our whole, maybe it was 100 billion. Anyway, that's basically low volume. But also what you want to know is if the average volume is 745 billion thousand, 745,000, less than a million, then this one here is pretty close, 717. So the volume is not, it's like a normal day. There ain't no big news out there. Ain't nothing really going on. So you can go and say it's been doing that for the last 10 months. So that's good for us, the volume. If you're buying a stock and you don't want it to be that volatile. But like I said, the low float is the biggest thing. Low spread shares outstanding is good. Stock could go, like I said, it could go up 50% in one day. This stock could actually have a whole lot of trading and it pop, just go from $40 to $60 in one day if somebody come out and act crazy and go in and try to buy it, or if somebody dump it. Bad news or good news could drive this stock huge in one day. So that's the difference. That's why you want to kind of watch the outstanding shares. And for a person that day trade, probably wouldn't pick a $40 stock, but they would look at that, and they ever see that stock have like 3 million shares, they may go in, or 10 million shares, they may go in and just try to ride the rate. All right, so and the same thing with the 52-week high. So like I said, this is the same thing. It's a snapshot, but because it's an ETF, I did not capture this on the last screen, but I'm pretty sure Lucid, if I would have scrolled, make the capture larger, it would have had the same thing. It would have had the strategy. And I'm gonna come back to that. Let's go over here. Remember, I was telling you about the 1 year chart. So you have to be careful when you think this is a year. You selected a year, see the 2025, but over here, it's starting way over here in April. So that means this stock wasn't around in January, and February, maybe March of 2025, because it started April way over here, versus the other one had March right here. So you can know that because down here it said this ETF didn't start until March of this year. So stuff like that, and you would have known it. You might have. So if you went and looked at a 5 year chart, they might have had it all over. They might have had it where it was like nothing, 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 then a small chart, or they would have had it all the way over. You'd have to come down here and see if you've seen 2024, 2022. And it may not be there. You might be thinking you're looking at a 5 year chart. And basically, you're only looking at a stock that ain't been around that long. So some stuff like that can catch you off guard. Also, so I went over that, but that's one kind of know that. And it's the same with other companies. It's not plain as day. Right. Now, and so that's what I was telling you about. And it tells you a little bit about what the company do down here. It says it's something called synthetic cover call strategies that provide whatever. And it said this fund is not diversified. I didn't Google that, but I don't care. But you might want to know what that means. But I do know what cover calls are, and I do know what synthetic means. In this case, I do cover calls. Most of y'all know I do cover calls all the time. But in this case, synthetic means they don't actually own the stock. Normally, to do normal cover calls, mean you'd have to buy 100 shares of this stock to get one cover call, which is $4,000 per cover call. This saying they're selling or buying the cover calls, but they don't actually own the stock. That's why it's called synthetic. That's kind of hard. That's not there, but that's what strategy out here tell you a little bit of, like, I'm assuming for Lucid, it would have said something about they make electronic. So one of the other things we want to go over, and you almost need to have a whole couple sections on dividends and how dividends work. But the stuff you're going to notice on almost any of the Yahoo, Fidelity, hopefully Robinhood, like I said, Robinhood don't have great charts. It's kind of designed to trade on the phone, so it's hard to get all this on the phone. But anyway, you'll see the weekly dividend, and I should highlight weekly, because normally that's quarterly. All right. Normally this is quarterly, but it could also be monthly. This just happens to be a weekly dividend. So when you look at it weekly, you gotta know the difference between weekly, monthly, and quarterly because that number right there means a lot. The actual price. What this saying is the yield is annual yield, right? So it's saying, I'm hoping it's annual. I don't know. I have to go back and check on that because it seems like it would be a lot higher than 9%. But anyway, so but weekly dividend means this stock is going to pay 29, almost 30 cents per share every week. 30 cents per share every week. So looking at the dividend yield, kind of want to definitely know, um, watch and see this number. Like I said, they're getting a lot of weekly stocks now. But you want to know if that's weekly, monthly, or quarterly. This was quarterly, and that number was 30 cents. That means you're only getting 10 cents a month. I mean, that might be great depending on the price of the stock, but it don't mean you're getting. And so when you look at this and compare this to quarterly, you got to take this number, weekly dividend, because it's weekly. It's not even monthly. And you got to multiply this thing right here by 4 for each month and by 3. So you got to multiply this by 12 to get the quarterly dividend. Then you'd have to multiply it even more to get the annual amount that you would get off the stock per year. So if you multiply this by 12, that'll give you 3 months. Then you multiply that by 4, it would be 48. So you'd have to multiply that number by that 30 by 48. So you'll get 10, you got 4 is 12, you got 8 is 24. You'll get about $16 a year off of the stock if it hold at 29. Now, when you discuss dividend, you will know that this stock, this number, and this percentage will change every day. Most stocks, this number here don't change in a year. We're gonna pay you 10 cents a month. It's gonna pay you 10 cents a month for that whole year. We're gonna pay you 50 cents a quarter. It's gonna pay you 50 cents a quarter the whole year. This is a new stock, very, very volatile. This number could be 8 cents next week. Could be 30 cents the week after that. So this is not a good, well, I bought it, but I don't recommend it. And like I said, this is I didn't do the math, but I know it's not 9%. I know it's a lot higher than 9% a year. So you would expect this chart to be going downward spiral. I should have put some line in, but I'm gonna go back to that. But anyway, so and then the other thing you want to do is you want to really understand the ex-dividend date and the dividend pay date. Most of the time, the ex-dividend date on this one is 1/2/2025. That means you had to buy this stock before the opening of 1/2. You had to buy this stock before January 2nd, which means in this case, the market was closed on the 1st. You had to buy this stock February the 31st or 30th, whenever that Friday was, or whenever the 31st was, or you won't get the dividend. You waited until 1/2, you don't get the dividend. So the ex-dividend date is kind of confusing. It's probably best to not even wait till the day before. Just buy it a week before if you really want the dividend. And you can't sell it on this date. You gotta wait a date after that to sell it. But you're not gonna make any money. But you're not gonna make a dime if you try to buy it and sell it right after. You're gonna take that whole 30 cent back the next day. But anyway, that's you can't play. I can get 30 cent then dump it tomorrow. They already know everybody tried that. You're gonna lose every time on that. Anyway, and the pay date on this one they pay is weekly, so they gotta pay before next week. Normally this is a month or 15 days. So normally when you buy it, you gotta wait 15 days to a month before you actually get paid. You write your name down, but you don't actually get paid until like a month later. You have to pull up something to see that. And on here it doesn't say how much it's worth, but basically on the ETF, the net assets, it's probably going to be the same thing. Number of outstanding shares times the price will give you the net assets. So the other net was the float or the outstanding share by the price, give you the what was it called? Anyway, it will give you the what the company's worth. So if you took 40 and multiplied it by 5 shares, that's 16. So 5 times 4 times 16, it's about 6. So that's basically where they're getting that money. Shares about the price. All right, and like I went over that. I went over that. So on this one, it probably been a better shot. Probably would have been a better chart to do the support and resistance. So you would draw a line there, a line there, a line somewhere in there, probably a line there, a line there. You know, it'll be the same thing there. But you can see that the stock is going down. But what you I didn't do this, but I'm gonna do it real quick, and we're gonna call it a day. You would normally draw a line toward the bottom of the chart. So if you were to extend that line, you would say, okay, this chart got a peak, a bottom there, a bottom there. It would scare you because you think the next bottom would be down here some way, and saying if it don't hold right here and go back up, the stock gonna drop all the way down to here because of that straight line. Same thing at the top. Um, you almost want to go here, but now you got that peak, so you would almost need to go back further, but the stock ain't been back on that long, so you would think that you might have to go with the stock is going to fall from here to there down to here. It's going to make like a new range. So the stock has got a range of 40 to probably 60, but that's over here somewhere. 39 to 50. Okay. So it's got a 40 to $50 range, a $10 range. Your question is that new range going to be 42 to 30 something down here, because this could be like it's going down. And I don't know if I've told most people that when you buy a stock with that high, paying that high dividends, it's a 90% chance that it's going to be falling. So it may be a long time for this stock to get back up to here, if it ever gets back up, because it pays such a high dividend. This is, I don't know if I tell you what company it's called. Synthetic cover call. So it's a good chance that this stock will probably, I bought it, I know that it will probably never get back up to $43, $44, unless it has some kind of great news. I'm expecting it to continue to go down just because it's a very high dividend stock. And if I ever get to 100 shares, I'll try playing the call. I think that's about it on that. Got what I wanted to get today. I think that's everything. I would try to send these two out. Um, oh, net earnings. This I was talking about the market cap. I think that's everything. So I wanted to come back to this for, but anyway, oh yeah, I was going to say that if you looked at this chart, this is a 1 year chart. You can do a 5 year chart. This is lucid. Two things I was going to tell you about the difference between the 52. I was going to tell you about the difference between the 52-week spread. Anyway, you can kind of see that if you drew a line from here to there, it held right there. So hopefully it's turning up. And if it wouldn't have held right here, that number would have been. If you could draw a line from there to there, that went kind of up and down. So hopefully it's turning and going back up. And you would do the same thing on. It's kind of hard to draw one on here because there's no true pattern. Kind of say from here to there. It's on an upward trend, so you almost got to go to support line. There's not a good, 1 year line you can draw to say how's the trend. Almost say it done broke the trend from going down to going up. It's not a great chart to guess on that. What I was going to show you was, remember the last chart, the QDTE? The difference between the 52-week high and the 52-week low was like 40 to 50, I believe. Maybe $10. Well, if you took this stock and compared, and let's just say you multiplied about 10, that'll be 20 to 19 to 44. So the gap between here and here is $2 to, I don't know, you wouldn't probably go all the way to $4, but you would say $2 to 350 is the 52-week spread. Even though we have that up there, majority of it's here and here. on average or percentage-wise, that's a lot bigger than the other range over there. So this stock would be um wouldn't be more volatile. It's just that the, the range is actually more. If you said, yeah, this is only a $5 stock, but when you look at it, it's moved a lot wider than the other stock. Let me put it like that. So being that the other stock has only got like a $10 range, it don't seem as volatile, but it's on a year old. That's something to kind of understand what's the senior the range compared to other stocks. I don't know how important it is. All right. That's probably enough for one day. I hope y'all can hear this. And I will try to email out uh, videos of this or a link to the video. I hope I got a YouTube somewhere on YouTube. Um, and I will email out the charts if y'all want to kind of see what I highlighted. And then I'll pull up and do a actual short video on Fidelity, show you how you get to the same things. And I'll have one up and I'll show you how to get to the same information on Fidelity about a stock, but you'd have to click. It would be a lot more clicking. It almost have to be an actual interactive chart where I actually have to click on it. And I don't think um, do this real quick for me. Try this. I don't know if it's gonna work or not. Okay, it did. All right, so this really wasn't supposed to be part of it. Let's hope this stay open. If y'all can see that, this is like a stock. The I might have to do the other way. Come on, yeah, okay. This is the overview. I call it summary, but it's the overview. It's basically the same thing. I'm gonna give y'all another 5 minutes. It's basically the same thing as same information, but their layout, you can't get it all on a screenshot. You got to come over here and scroll down. So this would be the main screen. And get to the chart, you got to go way down here, get to the chart. And I don't know if you can customize this, but like it's got a whole lot more information. But you can't really do a screenshot and show the chart. This is the chart of the same company that GDTE, QDT, I'm sorry. So it'll show you this. So you don't see the dividend information on here. You don't see the chart. It's got a lot more information, basically the same 16 million float. So it's hard. It's a little harder to quickly. You can look at the E-Trade and quickly kind of get a lot of information. This one you got here. Get the dividends. You got to actually come over here, and you would have dividends right here on the ETF. It's called distribution. I mean, you got to scroll down, and hopefully I'm still online, and I am not still on. Oh, I will show you this though on overview. I think I saw it. It's still here. I might be in got kicked off. Let me go to chart plus and see what I might have so E-Trade and yeah, I'm logged out. No, okay. So E-Trade and any other company um, got a bigger chart. And on E-Trade, yeah, I didn't get kicked out. I don't think I'm still logged in. But on E-Trade, and you would have a S or something to show you all the dividends that you paid on the big chart. On Fidelity, previously, and said, I don't think I'm logged in anymore. So it would have showed you the actual dividends on the chart. But on Fidelity, you got to actually click on. If you clicked on distribution, you'd have got the dividend information from there. And on the stock, it would have showed you that you had to click on dividend to see the dividend. It's just a little harder to screenshot, but a lot more information. But the same thing, bid size, X size, so you just see the bid. And then the size would be think I didn't got kicked off. Well, okay, so yeah, so on here, remember the other one said the bid was this and the size was 100. On here, it's only one, so you have to know that that one means 100 shares. That one means 100 shares. So that's another difference that you'll see between different brokers instead of using the whole 100. That one actually means they are in hundreds. So basically the same thing the bid, the size is basically 100. So anyway, we'd have to go back over and try to do a one just on some screenshots on Fidelity. You can click, or you can click through it and ask some questions. How do you get X, Y, Z? You can't really customize these screens on any company. Mostly are standard. But down here, you can see where it says 6 months. If you went to 1 year, same thing. See how it starts at April. It don't tell you that it just started. So if you went to 5 years, on some companies, this would be a whole chart. See, clicked on 5 years, and so you're saying this. Okay, this is how I look. It's not how I look in 5 years. Because down here, you don't see um, December, or January. So this is kind of tricky and confusing. This is what you have to watch because even though you clicked on 5 years, this chart is less than a year. So it don't just highlight, jump out at you. You have to kind of watch that on some stocks and see was a true 5 year chart. Um, I should have cut this off. Yeah, see if it's going to actually pull up. Oh my God, they have done it all. But on a true 5 year chart, it would have showed the whole 5 years. Yeah, some of the stuff I'm not going to finally got logged out. Anyway, I wasn't going to go over Fidelity anyway, but so that's go through, and I'll try to email you out that, and I'll also send you the broker thing. Most cases, the broker don't really matter, but there are some differences in why certain people pick certain brokers. Hope y'all enjoyed it. You got any questions? Um, try. I will actually post a video on Facebook too, so you can actually go in on the video and ask questions there. And hopefully I can learn how I put it on YouTube later.